Let's talk about stock price a little bit, guys. One of the more common questions we've been getting of late, anyways, is about stock prices. And for those who are just starting out in the markets, what is the best price level that they should be looking at when it comes to first starting out trading? Should you be looking at penny stocks? Should you be looking at that, kind of $5 to $25 range? Should you be looking at anything above that? So we're going to go over 3 different price levels in this video and discuss a little bit about what to expect when it comes to trading 3 different types of stocks.
Absolutely. And look, the first things first, you mentioned penny stocks there, Brennan. I want to start, I want to talk about lower price names. And I'm going to go with something like a Ford here. And you'll say, okay, well, Ford trades, $19 to $20. It previously traded in those teens. I think it's the perfect pocket for that. When it comes to the really small caps, under $10, even penny stocks, they're almost in a category of their own. And I think they would deserve their own talk. But when you think about something like a Ford, it has that perfect blend of enough volatility that there's going to be gross winners on it. You can see it tends to work in good trends. It tends to respect a lot of the technicals. The other thing you're going to concern yourself with is solid liquidity. Right, you're always going to find, and every single lot you see on level 2 here, these are 100-share lots, so sort of multiply each by 100. But you're going to see, anywhere from 20, 30,000 shares per level. When it gets to an even level like a $19.50, like a $20, or a 19 even, you're going to find hundreds of thousands of shares available. Just all kinds of liquidity that allows you to scale. You will never be worried about almost never worried about a liquidity vacuum on this type of a stock. While at the same time, you're going to be able to benefit from solid price movement. So when I pull up like a 15-minute chart of Ford, it's not barcoding on you. It's still going to give you like today, when a lot of stocks did this, these wipeout bottoms. It gets a hard break through 19 even, makes a bottom in front of 1850, and then you're going to see a 19 to 1950 type of move. So when you talk about respecting those quarters, those evens, it'll give you that look. It'll give you the liquidity to leverage up on your shares. It's never quite it's never quite going to give you those crazy moves where it's going to halt on you. Obviously nothing is impossible. So I should start by saying that as well. But you'll never have to worry about getting halted on something like this. Where if I did take some random $5 stock that also does volume, a lot of times there is liquidity risk that those are going to halt, which is a separate category. So for a beginner, something like Ford, which really respects those even levels. I mean, look at this double top, 2050, right? That 1850 here. Sometimes keeping it a little bit more simple with the cheaper names, and thus going to that $15 to $20 price target for something like a Ford, or maybe like NEO when it trades 25, 30 as well, right in the pocket of room.
Yeah, and then you step up. Like you have Ford on the low price side, and then you go up a little bit. You're like, okay, maybe I want to trade something that's a little bit higher price. Where would you go? I personally, and this is when how I started as well, when one of the few stocks that I started with, one of the names, Citigroup. It's just one of those financial names. You're going to get that volatility in the event that the Fed talks or says something, so you get that kind of action. Then you also just get general strength or weakness in the sector as a whole, because banking is important as part of the trading world and as part of the economy. So Citigroup is one of those names that I like to choose to trade. I mean, Citigroup, BAC, you have these names you can pick from, but I personally choose Citigroup just because it's just one of those names that you get consistent action, consistent movement. There's going to be volatility at times, but apart from that, you're going to get stability. I think that's what matters. And for me, Citigroup is one of those names that represents that. And I've traded it well. I mean, it's only done 0.5%. It's up 33 cents today. But at the same time, it's all about, just like any other stock, you've got to pick your levels, pick the levels that you want to work with, and take your shots when they're there. Let's just say, going back to Friday, you see this resistance here. If we were kind of looking to fade 64 with a 64.50 stop, you got to put 50 cents in risk. What are you going to get? $1? Maybe you're going to get 2 times a return on a $60 name. I think that's quite well. That's a quite good payout. So Citigroup is my personal preference in terms of trading banking names. It does like 17 million shares. It's done 17 million today alone, and we're still about 2 hours from closing. So it's going to get some volatility towards the end as well. So you get volume, you get stability, and you get to participate in the volatility whenever the Fed wants to open his mouth and say something.
Let's go to the extreme high end of the range now. So we talked about that kind of $5 to $25 range. We get into the mid-range stocks. We're going to show you now one that is on the extreme high end of the range. I'm going to give you a tool that can help you out as well. And I'm talking about Chipotle Mexican Grill, guys. This is a $1,600 stock. So again, we're going right off the charts when it comes to price level. Down at the bottom of the screen here, I simply added ATR, which is average range, right? So we're talking about the average daily range that is traded in a stock. When you are talking about the forwards, you're looking at maybe 30 to 50 cents. You get into the Citigroups or any of the banks for that matter, you might get $2, $3. You get into this range, and look at this average true range right now is at $44.75. That's in one day. So this stock you can expect to trade in a range that ranges between maybe $40 and $45 over the past little while. You can see it gets up to an extreme up here of $55 in a single day. So when you're looking at the risk profile of a stock like this, you can immediately kind of expand your range here way out to the extremes to a point where even the spread on a stock like this can be $5 or $6. So if you're trying to aggressively punch long by lifting an offer, you can expect to be instantly out of the money by $4, $5, $6, which, 10 cents, that's a significant amount of money for some people. So understand the liquidity, as the guys were talking about, understand the range that a stock can potentially trade, and you get a good idea of where your account size will fit the best within these kind of three ranges. Hope that helps, guys, when it comes to three different stock prices for beginners.